Beyond Meat stock was the talk of the decade in 2019. On the IPO date, the stock more than doubled in price. IPO price being at 25 USD, the stock closing at 66 USD. Within a couple of months, the stock was already at 234 USD, which is incredible. Within 5 hours, stock was at 66. Within a couple of months, 234. This is an investor's dream, doubling cash in months. You know, people say S&P 11% a year. You see Beyond Meat going mad. So much volatility. This has been a roller coaster. The 234 has never been seen again until it was seen in January 2021 when it was peak hype, and also there was Beyond Meat deal with PepsiCo. PepsiCo being the largest provider of snacks and beverages. So really, it was something huge for the company. Even though nothing much has happened of that deal or any translation into real cash for the moment being. Right now, the stock is at a disrespectful 35 USD. Comparing it at the 235 it seems like it's really sad. And today I want to welcome you to the BNB. We're going to be looking at a new way of looking at investments and understanding the price action better by looking at reasons why the stock have fallen so much. Really, like, you need to understand why it's happening. So in the future, if it does happen to another company, you might be able to cash out earlier and buy back in if you want to buy back in, if you really believe in the fundamentals of the company or whatnot. So it's really something to learn. Now we're going to be looking at, the first thing we're going to be looking is at the financial earnings, and that's the first place where a smart investor looks at. It allows us how much the company is actually advancing. That's what it allows us to do, looking at the financial quarters. And it also allows us to see how management is using the money and how management wants to proceed. Especially earning calls, they're really important. If you want to listen to them, they really help you understand the future of the company. So here we have a lot of reds and a lot of heavy percentage red, as we can see. First of all, revenue only down by 1.24% at 100 million at 680,000. Now that's not down very much, but we can see the net income is down very huge. So they really lost a lot of money. Now we know Beyond Meat does a lot of research. They really want to make their alternative meat taste more delicious. They want it to be better, so they really do spend a lot of money, and they have more reasons to spend money, like factories, packaging, all this inflation. So it really is something that can affect, and then we can see that they did lose a lot of money, and they lost it 3 times more, almost 2 times, like 2.5 times more than they lost the year previously. Their EPS, same thing, because it's earning per share. So if they lost like around 80 million, so every share lost $1, as every share lost $1 in value, not in dollars of value, but the company lost $1 for every share issued, as you can see. And their profit margins were down. So obviously, if they were losing $1 per dollar, now they're losing $1.80. It's really difficult to explain, but that's not the main point. Looking at these stats, we can see they are horrible, and this is just a surface level analysis. I haven't gone into the fundamentals. I haven't even gone into management. Nothing. As you can see, this is really bad. So we can see why the stock has been falling just from the quarterly numbers. And also, if there's another stats that's really important to know, the company has $733 million cash in their hands, and $1.1 billion in debt. And especially having debt in this time and age is really bad, because over time interest rates are going up. So each dollar they borrow from the bank, it's going to cost them more and more over time. So that 1.1 billion, if they were paying 50,000 a month in interest, sooner or later they will be paying 100, 120, 130,000 dollars. And that's why most of the small cap stocks are falling. One of the reasoning is that, and that's due to inflation. So when they say inflation is a bad thing for small caps, that's how it happens. There's a really long chain of things happening, and investors do not like that, so they just cash out beforehand. Whenever they hear inflation, they can cash out from small caps, go into safe companies, Costco, Apple, and all these kind of stuff. All these big companies get cash flooded into them, and all these small caps get their cash retracted from them. Also, this is really horrible. Obviously, we can see one more thing that's really horrible for Beyond Meat stock. It's the amount of outstanding shares, and that means they issued more and more shares. The amount of ownership you had in the company decreases, and I'll tell you how much. So it went from 60.12 million on IPO to today being at 63 million shares. So if you own one share in 2019 on IPO, the ownership now you have 0.94 ownership of the same company because they diluted. Now obviously the share dilution is not a bad thing. It's really how management does utilizes the cash you own. Do they do it in a good way or a bad way? So it's really up to them. But most of the time, in the earlier stages, share dilution is really a good thing because it ends up accelerating the growth. So if they get money, the company gets the money, and it allows them to accelerate the growth. Now, these are some of the things that went wrong with BYND stock. And if, for example, you see that's not happening in a company you just invested right now, this is a good time to take it off. In my personal opinion, Beyond Meat stock right now is a steal. Okay, but what it depends on is the execution of the management. The management can go bad, they can go up, they can go sideways, right? Like it really depends on the CEO how he moves. So if you like respect the CEO and his vision, listen to earning calls. You can obviously hear what he's trying to say and what he's trying to relate to his investors. And if you do like it, I'm gonna say you should go ahead. But if you do not like it, I'm gonna recommend stay out of this stock. It's a roller coaster. It's a roller coaster. And if you don't like roller coasters, stay out of it. I'm gonna recommend. There's so many other better opportunities in the stock market right now. Facebook down, PayPal down, and they're safer bets, way safer bets. I'm gonna say they're way safer bets. So don't subscribe to the channel if you are a quitter. Obviously, why am I saying that is because pain makes an investor stronger, it makes their character stronger, and quitter quit. So don't be a quitter and don't subscribe if you're a quitter.